Hello everyone. Thank you for joining us today in our budget webinar. I am Vikas Vasal, National Managing Partner Tax for Grant Thornton in India. I have with me on my panel Riaz Chingna, who focuses on direct taxes, and Krishan Arora, who focuses on indirect taxes. Lot of expectations were there in terms of the budget, expectations from different sectors and different classes of people. Having said that, there was a tightrope on which the finance minister and the government was walking because of the various revenue constraints. There has been slippage in revenue collections. Therefore, even though there were various demands in order to boost the financial services sector, reboot the real estate sector, or provide more funds for infrastructure, and also after the cut in corporate tax rates, there were a lot of expectation on personal income tax rates as well. I think the government has done is a mix of all these. They have tried to provide impetus in terms of infrastructure development, in terms of cleaning up the personal income tax regime, providing some support and roadmap on the GST, and also trying to keep the corporate world little happy. At the same time, focusing on larger macroeconomic and social development objectives. If we take clue from the economic survey which was unveiled yesterday, there was a clear mention about the wealth creators over there. There is an old maxim which says that capital goes where it is respected. I think the economic survey draw a lot of inspiration from that, and it clearly mentioned that wealth creation and wealth creators are important for the economy. At the same time, there was mention in the economic budget about entrepreneurship at the ground level, which includes the emerging leaders, which are MSMEs and startups. There was also a mention about employment job opportunity creations in the country because there has been some sluggish growth on employment generation. Formalization of the sector or formalization of the entire economy was on cards, providing impetus to financial services sector, especially what has happened in the last 12 to 18 months. So there was a lot of expectations, and some of these have already been met. In fact, there are a lot of positives in the budget as we see through the fine print. And also there are certain issues in the budget as well. For example, in case of individuals, even though it was not mentioned in the budget speech, there is a change in the definition of how a residency is to be determined. We shall cover some of these. Let's move on to the direct taxes portion now. In terms of direct taxes, the corporate tax rate cuts which were announced in the middle of the year were really welcomed by the corporate India. Now, on similar lines, personal income tax regime has been smoothened up or cleaned up. As the finance minister mentioned, almost 70 out of 100 tax concessions have been streamlined or rationalized. If you have income below 15 lakhs, I think, Riaz, then there is a lot of benefit. But over there also in the fine print, some of the tax reductions go. I think it will be good to hear your viewpoint on that.
Sure, Vikas. Before it's a weak economy, high levels of unemployment and low demand, and therefore it was felt that there would be a lot of impetus on government spending to spur growth. Maybe there the budget may have fallen a bit short, but on the tax front there have been a lot of changes which have come in, and it has been a bold budget to that extent. The personal tax regime that we spoke about, on one hand there has been a change in the rates, there has been a reduction in the tax rates, and therefore a significant saving for assessees whose income are less than 15 lakhs of rupees. Having said that, it comes with a rider that various deductions and exemptions which were available will no longer be available. For example, investment-based deductions like the ATC deduction, the standard deduction for salaried employees, the insurance, medical insurance deduction, the house rent allowance, leave travel concession, and also the interest on housing. All these deductions go away, and therefore the advantage that one sees in terms of a rate will be diluted to that extent.
So
yes.
In terms of section ATC, I think that is one section in the income tax law which we all have been very familiar with. In fact, there will be hardly any taxpayer in the country which would not have utilized as an individual taxpayer. Now, taking away that will also have some sentimental value attached to that.
Yes, absolutely right. It's a sentimental value which will be affected. So, we have been used to making those investments, but for higher level of income, the impact may not be that high because the ATC deduction was restricted to 1,50,000. So it may not impact anybody with a very high level of income, but yes, at the lower levels, it will not only have a financial impact, but also an impact on the feel-good factor.
So in fact, what you are saying, Riaz, is that there will be people earning below 15 lakhs which get the benefit, which will cover a large population of individual taxpayers, but people earning more than 15 lakhs will not have that kind of a respite. And also a choice has been given whether you want to opt for the new tax rate regime or continue with the earlier one along with some of the tax reductions which are left.
Sure, but while there is a choice, given the fact that all these exemptions and deductions go away, even then, in most cases, it will be advantageous to go for the new tax regime. So, to that extent, it has been designed in a way that it will be more popular for people to go for this new tax regime.
In fact, looking at from the last year itself, when in the budget some rationalization was done in terms of some of the allowances, I think it was written on the wall and it was just a matter of time when these deductions were to go. I think in a clean sweep this time, borrowing from the cricket terminology, a lot of deductions have gone. 70 out of 100, that's the number. Now let's look at some of the other tax issues in terms of the individual taxpayers, especially on the ESOPs. There is a welcome change. Even though I think the government has adopted a mid path by not completely doing away with the ESOP taxation at the time of perquisite, but at the time of sale. That was a demand from the startups and the industry. That has not been done away completely, but there is a welcome change. Another significant change in the fine print is on the residency rules. Riaz, I think we will invite your views on that.
Sure, on the ESOPs firstly, there has been a change in the ESOP taxation over the years. So at one point of time, it was at the tax at the time of vesting of rights. Later, it went on to exercise of the option, and therefore there has been a change which has been made over the taxation of ESOPs over a long period of time. What has happened this time is that while we have introduced, as you rightly said, that only on exercising it will happen, but there are various conditions that have also been introduced. So they have just delayed it for a period of 5 years. And or at the time when the employee leaves the employment. So these are the additional conditions which have come in. So more or less, you're right, it is a mid path, but to a large extent, it is a relief as the problems on cash flow will be adequately addressed. The second part that you spoke about, the residency rules, yes, there was not any mention of the change in the residency rules in the speech. But this will have a substantial impact. So now Indian citizens who are resident outside India will be treated as Indian residents if they do not pay tax in the country where they are rendering services. So if you have somebody based in Dubai, for example, when that income is earned, since there is no tax in Dubai, the person would be treated as a resident in India, and therefore global income would be taxed in India. We will have to look at the finer nuances because then of course there is a double tax treaty that we can go to, but by and large this is a substantial change in the residency rules.
I think this will significantly impact the individuals, especially the non-residents who go overseas, work for a short duration of time, or they are able to spend time in India and overseas. I think all those globally mobile population and the HNIs as well need to relook into the residency provisions effective this year. Even if they're not paying taxes, they may still be subject to tax in India. Absolutely. I think the corporates who have mobile population as well as the HNIs and the promoter groups need to have a relook in terms of the residency rules now.
Sure. In fact, while these provisions seem to be addressed to those persons who are actually changing residences for tax reasons, it is actually affecting a larger section of society.
Is it, Riaz, do you think mainly because there were recent news reports that a lot of people are immigrating overseas for the tax reasons? Is it directional that we are seeing that this is first change which has come in? We may see some exit tax also coming in later on?
Sure. So I think there will be a combination of a carrot and stick approach. So you will have the carrots. So some things like what we had seen in the last budget in terms of managers of funds when they are based in India that would not qualify as residents. So those are the carrots that have been offered, but there will be these stick approaches which will keep coming, and I wouldn't be surprised that in future if some exit tax is also levied.
So I think this is more directional. We need to wait and watch for the further changes which are brought in near future on that. In fact, on ESOPs also, there have been recent news reports that there were certain changes because of certain cross charges being made in the books of accounts of the international companies where the stock options have been given to individuals of the Indian companies. There have been certain notices being issued. I think it will be good that in the spirit of simplification and ease of doing business in India, besides the taxation changes which are being brought in, clarifications are issued in terms of the taxability and their accounting implication that will provide relief to a large number of taxpayers and the corporates over there.
Absolutely true, because on the other hand, the government has been also showing its focus on reducing litigation. So I think to that extent, clarifications on this will go a long way.
Okay. So basically the sum and substance in terms of personal income taxes is a big change in terms of cleaning up the individual tax regime, which means that a lot of deductions, concessions and unnecessary litigation which used to go along with that goes away. People will have an option, just like the corporates, either to continue in the old regime or move to the new regime. And last but not the least, the residency rules need to be checked, especially for the mobile population.
That's it.
Now let's move a little bit on the corporate tax side as well. I think there was demand from the financial services sector on long-term capital gains to be rationalized, which looked little unlikely because that was introduced recently. There was demand on dividend distribution tax. There was demand on MAT as well. Yes. And there were certain procedural issues with the industry wanted the government to ease further. Some of these have been accepted. I think the bets were more on the dividend distribution tax, and we see a very welcome change coming in this year's budget by the abolition of dividend distribution tax. So I think it will be good to hear, Riaz, what was the need for introduction of a dividend distribution tax, how the regime evolved, and how it will benefit the corporate India.
Sure. So dividend distribution tax initially was evolved to ensure that there was a more efficient way of collecting taxes. So what happened was that people earning dividend and paying dividend income tax on the dividends earned did not result in a very efficient collection for various reasons. So one was that the number of people earning income under the taxable limits totally did not bear any tax. Also, that there would have been leakages where you have various people not necessarily declaring all their income. So there was a strong reason for introduction of the dividend distribution tax. And having said that, in fact, the total collection improved substantially after the introduction of the dividend distribution tax. But what happened thereafter, we had a couple of things that were introduced. You had your securities transaction tax, which was there. You also had a tax on dividend in the hands of the recipient whenever the quantum of dividend exceeded 10 lakhs. Now, with this change, what has happened is that there's been a dual tax position. So you had tax in the hands of the company and then tax again in the hands of the individual who earned the dividend if the income exceeded 10 lakhs. So there were in fact a lot of representations asking for dividend distribution tax to be removed. We did not necessarily expect it given the constraints that the government has been working in, but this has been a very, very welcome move that has actually come about. Now, while this is a great move, we should also see some of the fallouts that will happen out of this. So, LLP structures become highly tax inefficient after this, because you have a 30% tax on LLPs, and it was being balanced with the dividend distribution tax of corporate bodies, but it is no longer applicable. So I think LLPs will have a problem, trusts will have a problem, and therefore, and also on the other hand, on the positive side, all those disputes which were existing for claiming credit of dividend distribution tax in home countries, in the case of foreign companies, that will be adequately addressed. Some disputes will remain, but I think by and large a very positive move.
So in effect, if a foreign company has a subsidiary in India which declares dividend, it should be eligible to claim the foreign tax credit for the dividend, for the tax paid on dividends in India now, subject to the domestic tax law and the treaty provisions. And also they should be eligible for maybe a lower tax rate under the treaties now.
So that is an issue which will remain. So yes, the dispute that existed before was that while the dividend distribution tax was paid by the company, the credit was being claimed by the recipient of the dividend. So some jurisdictions allowed it and others didn't. So that was one part which existed. So that part has been taken care of, but now we still have disputes where the tax rate under the double tax treaty is lower than the tax levied here. What really happens in that is something that we'll have to see as we go along.
I think, Riaz, while this move is more from the corporate or India Inc. perspective, or the foreign investors perspective also, because they gain out of it, it also helps on the sidelines the small taxpayers, the individual taxpayers, because earlier the dividend distribution tax was getting taxed in the hands of the companies at roughly 21%. Now if you're in a lower tax bracket and you earn certain dividends, then it gets added in your income and you may enjoy the slab rate benefit as well. So 15 lakh income coupled with these kind of a benefit, again it's a positive sign for the large masses, especially the small taxpayers.
No, absolutely. In fact, a lot of provisions under personal income tax as well as other provisions within the Act have been directed towards the small taxpayer, and this definitely benefits the small taxpayer. For the large taxpayers, as I said, there will be no advantage. In fact, there might be a disadvantage, because now they might pay at the rate of 30% as against the 20% that they paid before.
So let me ask you a little tricky question, since you mentioned about the LLPs. Now, with the trust routes being there in terms of succession planning, reorganization of businesses, etc., where the surcharge continues, it means the effective tax rate is much higher. Does the corporate regime becomes better in terms of the structuring and holding of assets now, because the corporate tax rate is 25%?
Yes and no, because there are various other factors that one has to take into consideration when one is doing succession planning. So the tax trusts in fact provided greater control over one's assets, and also when some heirs are situated in various other jurisdictions, tax planning was much easier, or continues to be much easier under the trust route. So I think it won't be a simple answer of shifting from trust to company.
But it's something to think about.
Absolutely.
So before we continue with the ever-evolving regime of taxation, let me ask Rajat, who is our economist on panel, in terms of how he sees this year's budget, especially in terms of fiscal deficit. So clearly it was expected we will breach fiscal deficit, which we have. The only debate was what was the percentage going to be, 3.6, 3.7, 3.8, and one figure I heard was 4.2 as well. Now fiscal deficit has been breached and government has accepted that. Okay, I think that's a very bold statement which the government has said, that investments will go primarily into larger macroeconomic development projects. How do you see this move in terms of breaching of the fiscal deficit from the foreign investors and the rating agencies' perspective?
I think the market had already sort of factored this in. There was no doubt in anybody's mind that the number that had been projected last year of 3.3% was going to be breached, given that direct tax collections were down, given that GST wasn't implemented the way they thought it would be implemented. And given the fact that disinvestment, spectrum sales, all the other sort of revenue items that were projected did not happen. Of course, there was an offset in terms of the RBI dividend, but even after net of all the inflows, we expected that the fiscal deficit target of 3.3 would be breached, and I think the markets were pretty much on board that the FRBM Act, which allows an escape clause in exceptional circumstances of 0.5%, would be invoked, and which is what the finance minister has done. So we've reached the sort of target of 3.8%, including the 0.5 that was in the FRBM. But I think the fiscal situation of the government is a lot sort of more worrying than just the 3.8%, because as you know, we have a cash-based system of accounting in the government, and therefore there are lots of items which are not on the balance sheet of the government, the FCI, the fertilizer, the oil bonds, etc. So I think this is a good sort of step they've declared. They've gone to 3.8, and next year they're going to go to 3.5. But what I'd like to see is that a consolidation of all the fisc in the hands of the government, so that, you know, the point I've been making, and the point a lot of economists have been making, is that, look, we know that there are off-balance sheet items, there are, you know, states, you have to pay to the state. So everything put together, consolidated, probably gives you a fiscal deficit in the range of 4.5% to 5%, and that's acceptable as long as you tell the people that this is what it is, because rating agencies, etc., they do a lot of research. Economists are doing a lot of research. They know where the money is coming from, they know where the money is going. There's a lot of tracking of the Indian economy, because there's interest in the Indian economy. It's one of the fastest growing economies in the world, even after the slowdown. I mean, 4.5%, 5% still puts India on a high growth path compared to, of course, the developed countries. So there is interest, a lot of FDI is coming. So the point I'm making is that because of the interest, there's a lot of scrutiny on the Indian economy, and people know. So the government could use this opportunity to come sort of clean. Look, I'm not using come clean in a negative sense, but tell the people that this is what the fiscal target is. And then, you know, what I didn't see in the budget and I hope to see was a roadmap towards fiscal consolidation, which they've mentioned in the past in the FRBM, that we will go to a 3% fiscal deficit and a sort of zero revenue deficit. And that will be a great achievement for any government if you're able to move to a zero revenue deficit regime, and so that the quality of the expenditure of the government goes into infrastructure, you know, addressing the classical infrastructure, rather than on paying subsidies to agriculture, subsidies to food, subsidies to, you know, on interest payments, etc., which gobbles up a huge part of the government revenue. So I think this is a good step, but I hope that the budget is not the end of the economic reform exercise for the government, and that we continue down the path of telling the people and the rest of the world where we are.
So on a lighter note, I have generally found economists to be a little skeptical, especially at the time of budget, but we have on our panel a very positive looking economist who is quite optimistic about the growth rates and the fiscal deficit, even though being breached within the limits. Right. I think it should send positive. Now, what's your take on the nominal GDP growth target of 10%? Given the various constraints we are working on, we know there are certain green shoots which we are emerging, which we are seeing in the market, but still, if you look at real estate, infra, automobile, etc., a lot of challenges over there.
Right.
So is 10% realistic in the present scenario, or it's slightly optimistic?
I think it's sort of on balance, I would say it's on the optimistic side, given that we are coming off a 5% growth rate. And if you look at the past growth performance of India, it's been consumption driven, a lot of it. And during the golden period of India's growth, it was investment driven. But of late, a lot of the push to growth has come from consumption. And we know that consumption is down and investment is not picking up. A lot of the household savings are being appropriated by the public sector, which is not leading to much of investment. So there's no room for investment. So what I'm hoping to see in the next year or so, and to answer your question, is that if we are able to sort of get to 6% in real terms, So there's clearly a 1% increase, and that increase could come on a combination of both. Now you've put more, you're trying to put more money in the hands of the people, which if there are some positive spillovers from there, plus the investment cycle begins to kick up again, then I think we could reach 6%. And given inflation in the range of 3.5% or 4%, which we are expecting it to moderate, and Kharif crop is going to be good, so we'll see a moderation of headline inflation. So I would see 10% to be on the optimistic side, but I think I would give a sort of range of 9 to 10% for nominal growth rate. Last time the nominal growth rate was projected at more than 11%, and we penciled in at 7.5%. This time we're expecting 10% nominal, so we could sort of see a range between, I think, between 9 and 10% in nominal terms, but 10% would be really dependent on the real growth rate, which is 6 to 6.5%.
So between 9 and 10%, I think we all will be very comfortable.
Nominal terms, yes.
Nominal terms, great. Let me change tracks back from macroeconomics to the simple word of taxation. May I use the word simple word of taxation? Then I have to use the word amnesty schemes also. Kishan, I think the government and the bureaucracy is little buoyed about the success of the IDT scheme, and they should be. I think credit goes to them for reaching out to the various taxpayers through different forums. We know tax officers made a concerted effort in approaching the taxpayers and convincing them to come forward. So I think 1.89 lakh taxpayers, 38,000 crores of taxes. How do you see amnesty scheme on indirect taxes regime at the central level? And do you think more and more states will come forward? Some have, but would more and more states come forward on that? What's your take on that?
So because amnesty scheme was introduced with the very objective of eliminating the long pending disputes, the procedural matters under the central excise and service tax laws, and the objective was also to give assessees one-time chance to save all the undisputed or the disputed interest and penalties. The success of the amnesty scheme lied in the fact that a lot of medium to small players who were issued notices which were long pending on procedural matters were able to take those calls and get those matters out. So it was I think the momentum only gained in the last 2-3 months, while we were expecting that we would also get one more chance, or maybe one government will also give one more extension to this scheme. It did not happen, unfortunately. I was expecting this budget to actually give one final chance to the assessees to come up with offer amnesty to the earlier pending litigations, because a lot of that percentage was pending for the large companies not going for it, who were more confident that they would be interested in litigating that, or the demands were frivolous. Also on the other side, customs was not part of this amnesty scheme, so one was expecting that maybe this time around they would also offer it to the customs laws. But in overall regime, I think this was one positive move which happened, and the result of which government saw, and that's why they have gone ahead and introduced a similar scheme for the income tax part.
So Riaz, the ball is in your court. How do you see the scheme? I think one big difference is that under the indirect tax amnesty scheme, which covers services tax and excise duties, I think the scheme was very attractive, not only in terms of interest and penalties going away, but also in terms of tax demand to be paid, the personal tax demand. So I think almost 50% to 30% concessions were there. But we see that even though under the direct tax scheme also, there are concessions on interest and penalty, but probably the taxpayer has to pay a large portion or the entire portion of the disputed tax amount. How do you see that?
Yes, clearly that this Vivad Se Vishwas scheme is coming from the success that the government saw in the indirect tax scheme, amnesty scheme, which was introduced. The only issues here are that, firstly, the time period given is quite short. Mm-hmm. So the payments made up to 31st March 2020 will be covered with a complete exemption from interest or penalties. Between 31st March and 30th of June, whatever payments are made will have a small amount of interest or penalty, but one will have to read the fine print to see exactly to what extent these benefits are diluted. So given that the period may be quite short, and since there is no relief from the basic tax amount, disputes which have a substantial legal base will not go in for settlement, because one would expect that companies would also like to just buy peace and close matters. That may not happen as much when you have a situation where 100% of the tax demand would have to be paid even before 31st of March.
So effectively what we are saying is it's more like a revenue collection measure, and just like we see in the commercial contracts that if you deposit the money or you pay the invoice to a particular date, you get some concession. It is more like that. I think this requires a slight relook in terms of the portion of the tax demand to be paid. Maybe the government will make it more attractive as we go along. So, but till then we will have to wait and watch for that. But I think the procedural disputes which were there, certain corporates may like to come forward for this.
No, absolutely. Not only the procedural disputes, there are a lot of disputes which continue to be in the courts but have not yet been resolved just because of the quantum. So even if the disputes are not very strong in terms of success from the assessee's point of view, very often these cases are not being dispensed with. The assessees do not withdraw it. This may be an opportunity for a lot of those assessees also to withdraw it. So it is a positive thing. I think it's the government has clearly shown a focus over a sustained period of time, that how to reduce disputes. So this is a step in that direction, and I think it is laudable, but it would have been, maybe one needs to see if it needs to be a little more attractive than it presently is.
So having said that, I think we are moving in the right direction. If you look at some of the changes which have been brought in terms of even the appeal filing process from the revenue authorities perspective, the limits have continuously been revised upwards, as a result of which also a lot of cases have fallen through. I think all these moves, whether it is the e-assessment, now e-appeals also, the move is directionally is very right and in the right direction, that we do not want to litigate, we want to cut down on the disputes. I think it's a welcome change. I hope that some more changes are brought into the direct tax amnesty scheme to make it an even bigger success compared to the indirect tax scheme, because the number of cases which are pending are much more under the direct taxes.
No, absolutely. In fact, I would like to add that there are some provisions which have been brought in which have not really been taken up in the speech, but they are all in the direction of reducing disputes. For example, the TDS rates between section 194C, which is for subcontracts, and 194J, which is for technical services and professional fees, were different. It was 2% for 194C and 5% for 194J. Now both of them have been reduced to 2%. That again leads to a situation that will, in the long run, reduce disputes. So there have been steps. Another very important thing which the finance minister has mentioned is the taxpayers charter.
Interesting, very interesting concept, yeah.
So I think while there is a taxpayers charter existing at the moment, nobody really pays heed to it. By bringing it in the statute books, I think one realizes the importance of the taxpayer, and I think that will also go a long way in the treatment by the tax department of the taxpayers, and therefore reduce disputes in a number of cases.
And what's your take on the emerging sector in terms of various changes which have been brought to provide some relief to the startups, MSMEs, etc.? I think all directionally very positive changes. There were a lot of demands being made by startups. If you look at the last 2 to 3 years tax regime, the frequency and the number of changes being brought in to support the MSME as well as startups, which are the tomorrow's emerging leaders sector, I would like to use that phrase. I think these are very welcome changes. Do you think this recent change on the MSME sector by increasing the audit thresholds from INR 1 CR to 5 CR will help the sector?
No, definitely one of the biggest challenges of the small and medium enterprises is compliance, because not having adequate infrastructure creates a big burden on the sector. So increasing this from this threshold from 1 crore to 5 crores definitely will help, and it is a clear step in the right direction. But one will have to see the fine print again. There are some conditions for this, and one of the conditions is that to avail of this higher threshold, that entity should not be having cash transactions over 5% of its turnover. Now, again, laudable, because clearly the emphasis is to try and make more and more business either through electronic means, through banking routes, so that it's all accountable and it's far more efficient. But knowing the Indian mindset, will it have a fallout? Will it lead to some practices which are not intended? I guess that is something that one has to see. But these conditions will need to be examined more closely to see how far the benefit goes across. But definitely, this budget has a lot of things identified and focused towards the small taxpayer, including individuals as well as MSMEs.
Thanks, Riaz. Rajat, there is always a lot of thrust on agriculture in every budget, and rightly so, because almost 50% of the population is dependent on that, agriculture and allied activities. They need support, especially in view of the last few years of monsoon not being that supportive and distress in the rural sector. This year, a lot of thrust was also there on education sector, right? And also, FM mentioned about the logistics and various other things. Do you think adequate coverage has been given to all the sectors which required some support or impetus? And how far these budgetary allocations will support these sectors, or it's more sprinkling on some of the sectors only?
Well, I guess the FM had to prioritize, and this year everybody expected that there would be priority on the agricultural sector and creating sort of livelihoods for agriculture and allied activities, which is what the FM has done. We know that from economic research that although agriculture constitutes only roughly about 14%, it sort of contributes to over 45, 46% of the employment, and therefore there has to be a focus on agriculture. The other interesting thing about agriculture is that if agriculture grows by 1%, the overall GDP actually grows by more than 1%. So the elasticity of GDP with respect to agriculture is greater than 1, which is what is shown in this budget, is the emphasis on sort of building logistics support, building warehousing, helping irrigation, to try and make agriculture as less dependent on the monsoon as possible. And I think this year, because of the good monsoons, then the reservoirs are full, we'll see a good sort of agriculture produce, we'll see good agricultural productivity, which I think will have a good impact on the economy as a whole, because rural demand could pick up. And once rural demand picks up, then manufacturing and investment, etc., those spillovers will begin to happen. So your question is, I think priority is right. We needed to focus on agriculture. I think we need to do a lot more in agriculture in terms of distribution, not just logistics, but also the APMC Act needs to be sort of now done away with. Some states have done away with it, but a lot more states need to do away with the APMC, because if you want to double farmers' income, which is in the same spirit as trying to boost the rural economy so that it has a positive impact on the overall GDP, if you want to double farmers' income in the year that you want to achieve it by 2022, it's going to be a hard ask. But you can facilitate that by doing things like what you've done, is providing more allocation to agriculture, getting rid of the subsidies, the unproductive subsidies, and replacing them with direct benefit transfers. Now, if you notice, the finance minister said that the fertilizer subsidies are using to a distorted pattern of use of chemical fertilizers. So if I get rid of those subsidies or reduce the subsidies and do direct benefit transfers, you'll be killing two birds with one stone. You'll be improving the quality of the soil in agriculture, reducing the chemical usage. At the same time, you'll be reducing the distortion and giving money directly in the hands of the farmers, and thereby saving some of the leakages that have crept into the system. So overall, and this is my reaction with the entire budget, not just the agriculture part, education, health, the empanelment of more hospitals under the Ayushman Bharat scheme, these are all laudable steps. And education, given the ASAR report that comes out every year, and the ASAR report has just come out, it sort of reinforces the same findings over and over again. And in the budget, we see the finance minister say that, gross enrollment ratios of women have gone up at all levels consistently, are greater than boys, for girls are greater than boys. Those are great things. But we also have to focus, and I'm pretty sure the budget is not the place to do that. But these are good things, education, health. Amartya Sen has been saying this for years. Put in more money, government money on social sectors, on health, education, and you'll get a big bang for your buck over a period of time. You won't get short-term benefits, but you'll definitely get long-term benefits from this. But, for the entire budget, not just the social sectors, including, the data center, creating data centers, creating a digital economy, the foreign trade aspect that the finance minister talked about. I think all will be dependent on, and I guess all of you will know this, I just want to put this on the table, the quality of the implementation that we actually do. And if we are able to implement all the schemes that the finance minister has announced in the manner, even if we are able to achieve 50 to 60% of what is being targeted in the budget, I think we'll be, set the ball rolling in the right direction. But governance is always iffy. You were talking about the same thing in tax, which is compliance. Compliance costs in India have been so high because ease of doing business hasn't really eased even after so many years. So if we get the governance and the regulatory aspects right, which the finance minister alluded to, I'm happy to talk about this later, but all of this will be dependent really on the quality of the implementation, the quality of the governance. And I liked what the finance minister said, and you mentioned a little while ago, so did Riaz, is that the focus of the budget this year has been, it was peppered with trust deficit. I mean, everywhere, in almost all aspects, she kept talking about the word trust, Vishwas, Sabka Vishwas. And it was not just in tax, it was Vishwas in what we are doing. You must believe what we are saying and we will do it. But there is a trust. And the reason she had to say this is because there is a trust deficit between the public and private sector, which has manifested itself over the years in the Indian economy, where people don't want to pay taxes because they don't trust the government will utilize their taxes properly.
No, people want to pay taxes if you ease the compliance and lower it further.
And this is something that ICRIER, as a research institution, we've done it. We've done a report for the CBDT 5 years ago, which shows, we did surveys in 16 cities, including the smaller towns like Kanpur, Coimbatore, etc. And people say, we are happy to pay taxes, provided the harassment, the compliance costs are reduced, because we want a good night's sleep. And we're willing to pay taxes. The other aspect which people keep sort of bringing up in India is, what is it that I'm getting returned for my taxes? Okay, that's something that will happen over a period of time. Okay, that's something very Western, Scandinavia gives me free education, it gives me so many public goods.
But those are very small economies.
That's right, exactly, that's the point I'm making. So this will happen, our utilization of our funds in sort of infrastructure will happen, provided government's sort of hands, revenue hands are strengthened. And this is one way to strengthen their hands, is to reduce compliance, increase taxes, so can they do what they do best.
So Rajat, let me ask you a little difficult question now. While we saw a lot of positives, and I think Corporate Inc. has also said that there are a lot of positives in the budget, which will spur economic growth, will boost investors' confidence, and provide impetus to various sectors. But we saw a very reverse trend in the stock market today. The market almost fell roughly around 400, 500 points. Are we missing something, or is the financial service sector missing something today?
I think the negative in the budget that I came away with, and I'll say this upfront, is that, very hard-earned economic benefits for our economy were achieved after 1991, where we liberalized the product market, we got rid of the license Raj, we reduced protection in the government, in the economy, and lots of foreign investment, domestic investment began to come in. We developed very competitive telecom sector. We've developed very competitive pharmaceutical, automobile sector, etc. So the benefits of market reform have sort of shown up. There are other markets, land, labor and capital, which are yet to be reformed. Capital market reform is going and IBC is there, but I think IBC needs to be complemented with judicial reform so that we can fast track the process of insolvency. So, and capital is freed up for further investment. The negative that I see here, there was a lot of talk in the latter half of the finance minister's speech on protectionism and using protectionism as an instrument to boost domestic industry. So we'll increase tariffs on furniture, we'll increase that's sort of not relevant item. But if you want to really boost your electronics industry, the way to do that is not by increasing tariffs and to ensure that Indian producers produce on the back of a protected economy, but to have people locate here because this is a better economy to come in where the costs of doing business are lower. So a positive discrimination in favor of the domestic market rather than using protectionism. And I thought that the emphasis was on protectionism. Now, industry will always say that we don't have a level playing field, we are handicapped because cost of credit is so high, there's so much increased cost of doing business and so on. But be that as it may, protectionism sends a wrong signal that we are going back to the years I wouldn't say going back to 91, but we're going back to years of protectionism where Indian industry developed depending on how close you were to some bureaucrats or politicians rather than your entrepreneurial ability. And just relating it to what the economic survey said yesterday, it could have been a better choice of words. The economic survey said we need to be pro-business. I would sort of change that to say we need to be pro-market. Don't choose business. We need to get away from crony capitalism, definitely. And
but I think in terms of the announcements on developing the bond market and welcoming the sovereign wealth fund, there are a lot of positives.
There are
since
positive.
You mentioned about the tariffs, let me move to the indirect tax side of the announcements. I think GST by and large is outside the budget purview, but there were certain announcements on budget, and Honorable Finance Minister took some time in terms of laying out the roadmap that there will be certain more changes being brought in to ease the return filing and others. So, Krishan, what's your take on the GST, where it stands today and what we can see in future? I know very recently the dates have been extended further now.
That's right. So, I think GST has been one of the single largest reforms of the century, and you all know that. Undoubtedly, there would be technical glitches, there could be implementation issues, there could be rate upwards and downwards. All of those asked by the industry and trade. I think the positive part which has happened in the last 2 years has been that the government is very, very positive in terms of understanding that. So if you see such a large regime which has to be implemented nationwide, you also have to understand there could be glitches or improvement which will keep happening. GST is an evolving law. We have seen those things happen. Ease of compliance, the new return format, the minister reaffirmed the fact that it should be implemented from 1st of April. Today, a lot of manual intervention is being done, while the intention initially was that everything will be automated, which did not unfortunately happen. But the IT systems are being made more robust. What is also being done is that all of the corrections or matching of data, credits, tax liabilities between the buyer and the seller will now happen online once the new return formats come in. You don't have to do anything manually, and that was what was creating a lot of unrest between the industry as well as the traders. And the acceptability of such a large regime, also you have to look at the masses who are actually complying with this regime. So that's something which probably is the forward-looking part of this regime, and that's why one has to be positive when they understand how this law is to evolve, and ultimately you'll reach the right objective of the rationalization, simplification, ease of doing business, and all of these things are linked with such a large reform. You also saw some announcements which talked about, there were glitches at the time of implementation where people lost out on claiming their, credits which were carried forward from the earlier regime. That was a huge amount of money which people were carrying. A lot of them were not able to do that because of some glitch or the other. And now in this announcement, as we see, there is an additional window which will be provided for people to take back that credit. There is only a code procedure which is there today, basis which you can go and apply. But now I think in the law it was important that this one window should have been available again, and that's something which is happening. On the machinery front, e-invoicing is a very large change. It's a business change. It's not just a tax change. What the industry would expect is that a lot of testing, lot of time should be devoted to the implementation of this, because it has to be successful from day one. And that's something which people have learned, and the government has also learned from past experience at the time of implementation of GST, that this is one single change which will change the way businesses are working. Before you issue an invoice, your goods cannot move, your services may not be supplied, and you need somebody from the revenue to give a validation of that each invoice. It's such a large change. So considering these kind of changes, having a deadline which is right here, 1st of April, it's a very positive thought. But the fact of the matter is, we should also be wary of the fact that if this change has to impact the business, it has to be done after proper diligence as well as testing. So that time has to be given, and one would only expect the government to give a clear roadmap towards a phased implementation is what they're talking about, and do a proper testing and pilot.
I think the ingenuity of human mind also government has to counter and go back to the drawing board, especially in terms of the refund credits, in terms of fake invoices, etc. Definitely it's not an easy task for the government and the bureaucracy as well. And I think implementing this kind of a legislation at countrywide level poses its own challenging. Having said that, I think there are some significant changes on the customs duty perspective as well. Which are the ones which are likely to impact the industry at large?
So on the customs front, the main focus of the customs law this time has been to ensure that there is adequate protection to the Indian domestic consumption and the Indian domestic manufacturing. Largely to do with MSMEs. The finance minister definitely laid focus upon MSME importance, startups. So all the encouragement, which probably, and even Rajat was talking about it, that the encouragement has to be not just protection, also positives in terms of implementation and expand the tax base. So that is something which can happen when you provide a level playing field on one side on the duties which you pay, and easily import goods and sell in India, and they become cheaper by virtue of lower rates of duty, because the GST portion has now become offsettable. That does not become part of the chain anyways for the purpose of costs. But what is important is, if you have to protect the Indian market and encourage them to produce more and more domestically, you also have to provide a level playing field by increasing the customs duty rate wherever required. So there have been sectors specifically in relation to retail, footwear, etc., which talked about comparison to the Indian MSME and startups. But there are many other sectors where the customs duty rejects is again taking place, and this process will continue till September. So the government has also made a announcement that there is a roadmap which is being designed for further rationalization of the structure, as well as ensure that wherever there is not a level playing field, we should provide the level playing field by imposing those taxes. And one of those specifically happened in the medical and the healthcare industry. With the importance of this industry, as well as the fact that Indian manufacturing is becoming so advanced that we are able to manufacture all the medical equipments in India with large players present in India, a health cess of 5% has been introduced on import of medical equipment specifically. These are specific medical equipments.
But the only challenge with these cesses is they complicate the overall tax structure.
Unfortunately, yes, and that's why it's all important that any of these cesses, what needs to be seen by the government is they should live a life. There should be a shelf life defined, and after that purpose is achieved, you should remove these cesses.
We would love to see a shelf life on the surcharges and the cesses on the direct tax front as well.
So we only add the purposes.
Yeah.
And not the same.
Yeah. So Rajat, one thing we were debating was that whether government will cut on the personal income taxes or not. And an alternative which was being looked into is India ready to introduce the universal income scheme. I think there's just one small country which it has. Switzerland experimented recently with that, but not that successful. Is India as a country ready to introduce universal income scheme? Because that will avoid government making so many frequent changes, whether it is in terms of increasing the tax rates, the super rich tax that they introduced last year, introducing long-term capital gains on the stock market, etc. Because of a large base of the population, at least 1/3 gets covered under universal business income, and probably all these tax changes and the heartburns may be avoided. Do you think we as a nation are ready to introduce that scheme right now?
I don't think so.
Okay.
I don't think that UBI could be implemented in the manner in which it is implemented in, let's say, Switzerland, in India, because without making adequate changes to the subsidy regime, because the government will simply not have the resources to be able to carry out a meaningful UBI And by meaningful, I mean there should be at least a threshold level of income that should be given to everybody to make it, meaningful to have income so that they can make certain livelihood sort of expenditures. There's another reason why I don't think India is ready at the moment to introduce this scheme, which is that, and conceptually, the discussion is as follows, is that it could be a sort of admission of the fact that we are not able to create conditions where we are able to create productive jobs for our population, and we are substituting that because it's sort of our inability to do that, create the right infrastructure.
But direct benefit transfers, the farmers' help, etc., all these are partial universal business incomes.
They are, but they are very narrowly defined. A universal. When you use the word universal, it means that you're.
You and I also get counted.
I mean, obviously, we won't get included in that for a scheme which is designed sort of intelligently. We won't get covered, but 70% of India could get covered because, and we won't have the resources without resolving our subsidy regime. Today's subsidy regime is almost, if you just looked at interest payments and food, fertilizer, oil, it's sort of close to 2% of GDP. So that's a huge amount, and you'll need to rationalize all of that before you embark on a UBI scheme. The other conceptual problem with the UBI scheme, I think, or conceptual issue with the UBI scheme that people have spoken about, is that you sort of, government is reneging on its responsibility of creating the right kind of social and physical infrastructure and saying, I can't do this, so I'll give you money instead, and please be happy with that. And the other thing, the positive on the UBI, which again is on the board, on the table for discussion, is that given that the bargaining ability of workers is actually declining, especially in India, given technology, my bargaining power of unions, the bargaining power of workers have declined because, they can be substituted by technology, they can be substituted by machines, and that's increasingly happening. So given that the bargaining power is declining, a UBI, according to some, gives them a little more opportunity to sort of reject jobs that they don't want to do, which they otherwise will be forced to do because they want to. Poverty in India is such that you are doing things that you don't want to do.
So it cuts across both the sides.
They're
two
both
sides of the same coin.
Right.
Understand. I think overall, if you look at the budget this year, there's a lot of thrust on agriculture, rural development, education, getting the other supporting sectors like logistics ready for the larger infrastructure development. And on the tax policy front, clearly a lot of positives in the fine print in terms of rationalization, ease of compliances, which we would have loved to have more, but budget is not the only place where these ease of compliances can be brought in. I think there are a lot of positives, Riaz, on the startups as well, in terms of increasing the threshold of the turnover from 25 to 100 CR, a very welcome move. Similarly, ESOPs changes for the employees would also benefit startups. So I think the whole intent has been to cut down on litigation. That's why the new amnesty scheme is also being brought in. To cut down on the compliances as well, even though we would love to see more changes coming on withholding taxes as well as on easier GST compliances for the industry at large. But overall, I think the theme of the budget has been pro-business, pro-employment generation, and pro-capital infusion as well. Some of the changes which have not been talked about much are the sovereign wealth fund infrastructure being developed in terms of helping them come and invest into India, bond markets being developed. So I think overall it's a very positive move. Of course, in our own enthusiasm, we would like to have seen much more in the budget, but I think it's more positive. Yeah. One last take from both of you.
Yeah, so it's always a case of dil mange more, so we'll be satisfied, that's true. But overall, very positive, very focused, and also to just add what Rajat was referring to, about the transparency, the trust.
Yes.
I think there have been steps in the tax regime also to increase that level of transparency and trust. You have the faceless assessments that have come in, and a realization that the tax rates have to be as realistic as possible.
Yes.
There was a time when it was 97.5%, the highest tax rate. And today we are at a very reasonable tax rate. So I think very, very positive budget.
Krishan, your last take.
I think more or less, I agree with the fact that there's been a more forward-looking and a positive, measures which have been announced from the tax perspective. One probably thing which probably could have been also mentioned was how you would the roadmap towards increasing the tax base and increasing the sectoral inclusion in the GST, which was the whole intent. And oil and gas sector was expecting that. Probably we were expecting certain of those announcements, which did not happen. But yes, as rightly said, budget is not the only time which can lay down all these roadmaps. But yes, it would be interesting to see how in the next year all of these things pan out, because that is the intent of the government in a long-term perspective.
I think, Christian, the government is taking best advantage of the technology prowess that India has.
Yeah.
That's clearly visible in the way the GST regime has been rolled out. That's clearly visible in the way the ports are being digitized. That's clearly visible in terms of not only the e-assessment, now e-appeals, wherein probably sitting from the office you can file your appeals and contest the cases. I think we are moving in a right direction. And probably I would say that government is one step ahead of maybe industry in certain sectors, especially where there is a question of dispute resolution and revenue collection. In the interest of time, we would like to end here. There are a lot of issues in the budget in terms of the fine print, both positive and what we more expected from that. Thank you very much for joining us in today's webinar. Hope you enjoyed this session. We shall be coming out with our detailed analysis. Hope you would find it informative and enjoy reading it. Thank you very much.